Hello, everyone. I'm doing number 30 on the chapter 4 homework. So we're going to start with doing number 30. This company is called Lion Company. They're the merchandiser, and we're going to show them buying merchandise from a manufacturer and then selling the merchandise to the customer. The company is using periodic inventory system, unlike number 29, which they're doing the periodic system. So hopefully this will highlight some of the differences in the companies. So on April 2nd, Lion Company purchased merchandise under the terms $4,600 was the price. Invoice dated was April 2nd. The credit terms were 2 of 15, N of 60, and they use FOB shipping point. So what we're going to do is we're going to debit an account called purchases. And we're going to debit the price of the merchandise, which is $4,600. And we're going to credit an accounts payable, because they bought it on credit. All right. Second, on April 3rd, they paid the $300 for shipping charges on April 2nd purchase. Now, remember, they're using FOB shipping point, so therefore, the Lion Company, the merchandiser, will have to pay for, or the buyer will have to pay for the shipping. So, with that being said, we're going to debit an account. I'm going to call it shipping. Sometimes it's called transportation in. You pick what you would like. But we're going to debit this shipping account, and we're going to credit the cash account. And then we'll put the cash account under the accounts payable account. On April 4th, Lion Company decided to return some merchandise that had an invoice price of $600. So when they return that merchandise, we are going to first debit their accounts payable account, because they don't owe that anymore. And we're going to credit an account called returns and allowances. I'm going to use a lot of abbreviations here, so please bear with me. Those $600. Now, on April 17th, Lion Company decided to pay for their April 2nd purchase, net of the discount and the return on merchandise. So, let's go back to April 2nd. So, April 2nd, they said they bought the material on credit for $4,600. However, on April 4th, they returned $600 worth of material because they found it defective. So they're paying for $4,000 worth of material. However, they had credit terms of 2 of 15, and they met those credit terms. So if we multiply this by 2%, you get $80. So they have an $80 discount coming to them. So we're going to, first, zero out their accounts payable. So they get a debit of $4,000 for that. Secondly, we're going to credit an account called discounts. Well, let's be more specific. We're going to call them purchase discounts. And we know that the purchase discount was $80 in this scenario. And then we're going to credit the cash for the remaining $3,920. Now, on the 18th, they purchased merchandise from Frisk Company Corporation under the following terms: $8,500 price, invoice dated April 18th, credit terms of 2 of 10, and a 30 FOB destination point. And I've highlighted this many times in class. You have to be cognizant of the words at this point, because simple words can change whether you will have a transaction or not. So on the 18th, we do have a purchase transaction. So we're going to debit the purchases for $8,500, and we're going to credit the accounts payable because we bought it on credit. Now, on April 21st, after negotiations, the company received from Frist a $1,100 allowance for the April 18th purchase. So now we've got an allowance, and so we need to make a transaction for that. That's $1,100 here, and that will be debited to our accounts payable account because now we don't owe that. And lastly, on April 28th, they sent Frist a check paying for the April 18th purchase, net the discount. So how that's going to look. So if we go back, we will debit accounts payable for the $7,400 because now we don't owe that anymore. We're going to credit the purchase discounts for $148 because that's the amount of the discount. And we're going to credit the cash. Let's get this out of here a little bit. We'll credit cash, and this is going to look a little messy because I ran out of space here. $7,400. Oops, I'm sorry. No, because I did not take into account the discount. So we're going to credit it $7,252. Right. Well, that's number 30. Hope this helps. Have a great day. So let me show you here. So we had we initially made an $8,500 purchase minus the $1,100 that we had in allowance. That leaves $7,400. We made the discount. The discount was 2 of 10, so we paid within the discount window. So we get a 2% discount, which makes our discount $148.